Let me get rid of everything here, so that way I can start fresh, and there's no junk on my screen. So first of all, I'm going to start with NAS100. So NAS100, mind you, is the pair that I use whenever I want to trade anything like, for example, NASDAQ, because it's in the middle of both S&P 500 and US 30. I use NAS100 with proper divergence indications from US 30 and NASDAQ. Okay, so with that out the way, all right, give me a second. Actually, let me load up my streams, just see if anything is wrong. Okay, let me see if there's nothing wrong, or is there anything wrong here? All right, I don't think there's anything wrong necessarily. Let me say, that's me just stalking my own chat, which is kind of funny, but it is what it is. So let me get back. All right, so let's get back. Okay, so what we're gonna do right here is, what the fuck is this? Okay, all right, we're fine. So first of all, you can see that we have the let's start. All right, so this is basically the SMT divergence. You can see that it's heading towards the buy side liquidity once again. So we have a bullish bias through through the divergence right here. As you can see, this is just a pullback because it took this swing high over here, this swing magnetic zone over here, and it took this swing high and it retraced. This is just a sweep, the way I see it, the liquidity sweep, and then we retraced further below. Now we seem to be retracing back towards this buy side liquidity right here. I'm going to target the lows, the very intermediate zone in the magnetic field. All right, so with that out of the way, we have a bullish bias. So on this is on US 30. All right, so I'm going to do a bit of charting on US 30 just for the funds. But over here, what I'm going to do is I'm going to look at the overall pattern. So over here, you can see that this is the swing high and this is the swing low. And let me just take it a little further. Okay, so we can see that this is the swing high and this is the swing low, and there is a fair value gap right here. So what we're going to do is we're going to use this fair value gap. So let's identify all the fair value gaps. There's one fair value gap right here as well, so this whole area could be considered one fair value gap. So over here, this is a fair value area. Okay, so let me just say, let me just to not make this confusing, I'm just going to call it FVA, 4 hour FVA. All right, so apart from that, we have a 4 hour fair value gap right here as well, 4 hour fair value gap over here. So this right here is the 4 hour fair value gap that seems to be using it as support, and then we're going to retrace towards buy side liquidity, which is my god, why is it doing that? We just called it BSL, and then yeah, so right here we have the draw on liquidity towards buy side, so buy side liquidity basically. So we're going to use this fair value gap as support, and then we're going to use it to retrieve all the way towards this swing high right here. So pretty much we are in a premium at the moment. We didn't see any sort of reaction specifically at the 0.5. We had this candle over here. So if we zoom further in to what's going on here, you can see that this is a bit of a reaction over here. But if we hold up, let me try to analyze. Yeah, so if we do use the 15-minute time frame, you can see that this is a bit of a reaction over here, and then it continues further. So we had a lot of bullish displacement from here, and we're going to use this area over here. Now we're in premium, so I can't really take a trade on US 30 anyways. I wasn't planning on anyway, but yeah, so we have a bullish bias, so that's great. So now let's go to NAS 100. We don't really need to check S&P 500 because US 30 is the one index that's higher. So now we have a bullish NAS 100 is also, NASDAQ is also heading bullish. So basically right here, we're going towards this swing high right here. You can see that this is a magnetic zone. This is just a sweep. So what we're going to do right here is we're going to retrace towards that, but mind you, this is in the 15-minute time frame. So in the 4 hour time frame, we're going to go over here. We're going to probably, depending on the type of displacement that we see over here, we're going to either retrace towards this swing high or just come down from here. All right, that's what I'm expecting. So from that, what we can do here is we can see a lot of bearish displacement right here. there's a lot of bearish displacement right here. So what we can say over here is the fact that this is a fair value area over up to this point. It's a fair value area. So this FVA right here, forever FVA, and we're gonna use this level. So let's see how this goes. So what I'm gonna do here is try to spot a fair value gap. So let me first try to spot a breaker. High, low, high, high, lower, low. So we have a breaker right here. High, low, high, high, low, low. So we can use this candle right here as a level of support, and we can also spot for fair value gaps. We see a fair value gap right here. So this is a unicorn right here. Let me actually get rid of this for now. So we have a unicorn right here. So let me just say unicorn, and let me put this in the middle of both of these so that it makes more sense. All right, so we're retracing this. We're using this level as support. We're going to retest this level right here, and then we're going to retrace all the way towards buy side liquidity, which is all the way up here, as y'all can see. So what we're going to do here is just use this level as support and then retrace towards buy side liquidity. Now mind you, buy side liquidity right here is going to use this retracement. So if we look at the Fibonacci, for example, you can see that this is this Fibonacci right here. This is so we're still in discount essentially, and we're going to use this level as support. We're going to retrace towards BSL. So we're not using the level properly as support yet, so I'm not really convinced. So what I'm going to do here is use this level. Let's see when it actually starts using this level as support, which it will pretty soon, because it seems to have retraced a bit, and then it's going to head back to BSL, the swing high right here. So we're going to use this level overall as a support level, and then retrace towards buy side liquidity, which is over here. So let me just mark this out as BSL, swing high drawn liquidity. So we have that, and we're going to use this level as support right here, and then we're going to retrace towards buy side liquidity. Okay, so let's see how that goes. Let's see. So we gotta wait for the setup to be formed. So it's a perfect setting. We have a unicorn model right here, so we just need to wait for the this support level to be retested, and then used as a proper support level, retracing towards buy side liquidity, which is the swing high over here. And we're essentially in discount as well, so I'm expecting a retest somewhere around here, and somewhere around here, and then somewhere around here, because obviously we see a lot of momentum changes in the 0.5 OTE. Okay, so with that out the way, we're going to retrace towards BSL. If there's a lot of bullish displacement, I'm going to take continue. I'm going to adjust my trade to over here. If not, I'm just going to get out. Okay, so simple as that. Apart from that, we have let me look at gold real quick. All right, so on the daily frame, we seem to have. All right, so on the daily frame, we seem to have. All right, so we have a bit of a consolidating phase, which I don't really like, because I don't really like consolidating phases. But if I had to take a guess, I would take this retracement level right here. Okay, so this retracement level right here. So let's see how we can use this to our advantage. So over here you can see there is a lot of consolidating phases, which I don't really like, to be honest. But over here, let's see, we took out this swing high, and we went towards this swing high, and now we're taking out this. It's consolidating. I really don't like consolidating markets. I like market maker models rather than like consolidating phases. But if I just zoom out a bit, right, let's see what sort of curve we're expecting here. For example, we seem to be consolidating. This seems to be pretty bearish. If I draw a support line right here, pretty bearish. But what I can see here is the fact that what I can see here is the fact that this is oh my god, it's raining so, Jesus Christ, so windy because of the rain. But what I can see here is this is the swing low, and this is the swing high over here. So that's why I drew the OTE. So we seem to be retracing towards in this specific trend, we seem to be retracing towards sell side liquidity. This is just a sweep. All right, so we're going to retrace to SSL. That's the drawn liquidity right now. All right, so we're tracing towards that, and when you see this is the inverse fair value gap right here. So we're going to use this level as a inverse fair value gap. Oops, oh my god, I can't adjust it for some reason. What's going on here? Yeah, so there we go. So this is a inverse fair value gap on the daily frame. So we seem to be going lower, but for some reason it's retesting this swing as well. So it seems like this is the retesting this swing here, and we're going towards the upside. Let's see what's the reaction. I'm expecting a downward spiral from here. So over here I'm expecting a downward spiral just like this. Alright, so this basically, this is the downward spiral, and then we're going to go towards the 4-hour time frame. So you can see right here, the 4-hour time frame, that this is a swing high and this is a swing low. So we're going to go towards this swing high and this swing low. Alright, so with that out of the way, you can see that there is a swing high right here. So we're going to go towards this swing high. So it seems like we are going to be using this swing high as the first test. So overall, if I enter a trade somewhere here, I'm still below equilibrium, so I'm still good to go. And if I enter a trade over here, I'm still below equilibrium, and in this scenario I am retesting the 0.5 equilibrium within the swing over here. So this is the 4-hour swing overall, and then this is a 15-minute swing if you zoom into the 15-minute time frame. There you go. So you can see that we are retesting the equilibrium level, which means if I enter right now, it's going to be a loss, because I'm more than likely to get validated, especially at 0.5 equilibrium or higher than this, because this is just premium right here. So in other words, what I see right is I'm going to try to spot a unicorn model over here. So let's go for a low, high, low, low, high, high. So we have a pretty confirmed formation of a what do you call it, a unicorn model. Okay, so basically what I'm going to do right here is take this high over here and use this as a breaker block, this breaker block, and this fair value gap right here. There's a bunch of fair value gaps right here. So I'm going to use this fair value gap over here to as support, and then push it towards buy side liquidity, which is over here, the swing high right here. So this is the first swing high that we spot, and apart from that we have a bunch of swing highs. So you see this is the next swing high that I spot over here. So you can see that we took out this, and then we had a sweep. So you can see the displacement is not visible here, so it gets the resistance, the displacement in each of these candles start to sort of slow down a bit, and you can see the sweep happens over here, and then it retraces down towards sell side liquidity, but it didn't really retrace down. It's consolidating, so I'm expecting this to either go up from here or more than likely just go down from here. So this is a consolidating phase, which I'm not willing to take any trade right now, because it is a risky trade to take over here because the market is consolidating. So if I go down towards the 5-minute frame, you can see there is a lot of market structure shifts. It's very volatile at the moment. You can see that there's a lot of breaker structures and market structure shifts. So basically, in other words, you can see this is just a market structure shift, and then we have a breaker structure, and then breaker structure, breaker structure, breaker structure, market structure shift, market structure shift, market structure shift, and breaker structure right here, and breaker structure right here, and breaker structure right here, and so on and so forth. So it is overall consolidating, so I'm not willing to take any trade right now. There's a lot of bearish displacement, so I'm expecting the market to push upwards as well, because this whole area is a fair value area right here. So it is, this area right here is a fair value area. Alright, with that out the way, what we can do here is, just in case we do find a proper opportunity, it seems like we're going towards a market maker model, honestly. Look at this. It seems like we're going to retrace back to this buy side liquidity level. Alright, so what we're going to do right here is we're going to retrace back to this level, because this is the market maker buy model. This is just the consolidating phase of it. Okay, so with that out the way, so assuming this is the market maker buy model, see over here we have the sell side of the curve, we have the consolidating phase, and we have the buy side of the curve. If I zoom out a little bit, see, this is the sell side of the curve. It's a very weird market maker buy model, but these type of consolidating phases, I don't like taking these kind of trades, but it is what it is. Let's see if we find a proper OT. But in the meantime, what I'm planning on doing here is spotting the low, high, low, low, high, high. So I can use this once again as a breaker block right here. And if I see a proper fair value gap over here, I don't really see any fair value gaps here, so I can't really put too much faith in this, because unless it's a unicorn model, my strategy goes under unicorn model. So I'm not really planning on taking a breaker block as support towards buy side liquidity, because that's basically calling it for, you know, you're basically setting yourself up for failure. Next session is New York, which is at 6:30 in my time, so that's some time in between. So what I gotta do over here is just take this all the way down here, and this is the swing low, and that's the swing high. Alright, so with that out of the way, you can see that this is right below equilibrium, so I'm expecting a reaction of this sort. So I'm expecting this sort of reaction, and then hit this overall, because this is the TP right here, or at least towards somewhere on here, at least towards it. So because it's a very weird market structure over here, because it didn't take out the lows, neither did it take out the highs. So what I'm assuming here is that this highs still need to be taken out, because this is the first equal high. So we need to make sure we take out the buy side liquidity. So this is the buy side liquidity OL over here. So we gotta take out the buy side liquidity first, and then have a bit of a sweep, and then retrace down towards this swing. And I'm expecting a bunch of bearish displacement towards this swing. That's what I'm expecting today. Let's see if it plays out like that. If that is the case, then I am really good at this shit. Yeah, so let's see how this plays out. So I'm expecting this, if I see like a fair value gap in this fourth leg right here, I'm going to use that fair value gap as a entry level, but it's going to retest this 0.5 zone. So I'm going to wait for any like sweeps, or just the whole retest to be happening over here at 0.5, and then retrace towards buy side liquidity. Alright, so with that out of the way, so we now know what to do with NASDAQ, and we're gonna, if you want to scalp low-key, you could take this trade from this fair value gap all the way towards here, because now we have a validation over here that is closing a little bit above. Actually, a matter of fact, let me actually target the next swing high and take this trade, which is over here, this swing high, right here. So I'm gonna take the trade over here to here. Actually, that's not a line, so over here, let me just take this trade. So what I'm going to do here is go to the lower time frames. I'm going to, because it seems to be using this level as support over here. See, we retested this level, and now what we're going to do here is take a long up to this point right here, this swing high. All right, so we're gonna go for this. Let's see how this goes. It's like, oops, what's that? Let's take this from here to here. And the swing should be around swing low. This trade's not that worth it though, because we're already in premium, as you can see. So if I point out this section, for example, we're already in premium. This is papered, so I don't really mind, but we're already in premium, as you can see. So is it really worth taking this trade? No, it's not really worth taking this trade. So let's see if this is going to be using this level as support properly, and then retracing towards buy side liquidity. Easy as that. And XAU USD, you can see that this is the buy side of the curve, and seems like we're going to be using this level, this breaker over here, and retracing towards buy side liquidity over here. And then Bitcoin against USDT. Let's see, I took a trade over here. Let's see what's going on here. Okay, so I'm pretty sure the bias is bullish overall. You can see this is the market maker buy model once again. Oops, where is it? Market maker buy model right here, and you can see that there is a bunch of displacement over here. So what I'm expecting right here is a low, high, low, low, and a high, high. All right, so this is a breaker block right here, and we have a fair value gap right here. So what I'm expecting right here is a bunch of we have a bunch of displacement as well. So right here we have the fair value gap and the unicorn model overall happening over here. So we retest this level once again, and then we retrace towards buy side liquidity, which is right here. So we are retesting this level, so I'm going to place this stop loss like right below this swing low over here. So what I'm expecting right here is price to take out this swing high, this equal zone right here, because we're on the buy side of the curve. But if you ask me about the OTE in general, this is on a premium, for example. Like over here, you see that this is above the equilibrium. We had a bit of a retest at the equilibrium, and then we retrace towards buy side liquidity. But again, this is just the bias because this is on the daily time frame. So right here, we're on the buy side of the curve, and we can see in the 4 hour time frame, we can see a low, high, low, low, high, high. Once again, we have a breaker and we have a fair value gap right here. So So I'm going to call this whole area a level of support. So you can see price retests this level as support, and then it retraces towards this level, this swing high, takes out this swing high. You see a lot of bullish displacement that indicates the fact that it's going to be retracing towards the next swing high. The next swing high in my eyes is this part right here. So we already took out this swing high. So I'm going to expect a reaction over here and a reaction over here, and then ultimately I'm expecting price to hit this goal right here. So if we look at the swing high to swing low over here, for example, you can see that this is where I took my trade from. So we are entering from premium, in fact, because this is the 0.75 zone right here. So we are entering from premium, so that's not that great, but it is what it is, because this is a paper, so I don't really want to stay for the perfect setup to be forming. So I just want like sort of trial and error, I guess. So basically, I'm expecting a lot of bullish displacement. So you can see the candles are becoming a little low resistant over here, but yeah. So overall, we have this whole area right here as a level of support, as you can see, and in the lower time frame of things, you can see we have a consolidating phase for a while. We had a market maker buy model over here as well. So from what I can tell right now, you can see that we have a swing low and a swing high over here. So I'm gonna plot the swing low and the swing high right here, over here. So what I can see over here is that we are in fact at the wait, where is this? Wrong swing high. My bad. Sorry, I'm tripping. So right here we have the swing high to swing low, swing high to swing low. So over here, what I'm going to do here is use this level. So you can see that we retested this level. So we are sweeping liquidity a bit. So what I'm expecting here is a downward spiral a bit, because it went above this swing high right here, and then we're going to expect a downward spiral for a bit, and then retrace towards the next swing high, because I'm seeing a lot of bullish displacement from here as well. You can see over here we have a lot of bullish displacement. However, this is I'm going to see what sort of reaction occurs over here, because if it retraces further below, then I'm probably gonna get out. Okay, but overall I'm expecting price to hit this point anyway, because this is the market maker buy model, as you can see. Like if I zoom out, for example, this is the market maker buy model, and which side are we on? It's on the buy side of the curve. So ultimately it does need to hit this old swing high. Whatever that happens, it does need to do that. You know what I mean? So in other words, what do we see here? So we have a liquidity sweep. That's exactly what's happening here. And we're going to retrace a little below. We're going to sweep the liquidity, and then we're going to go towards the TP, which is over here. So in other words, I'm going to look for another model, right? So over here, you can see that we had a low, where is it? A low, high, low, low, and not a high, high. This is just a mitigation block. I'm not going to consider mitigation blocks, because in my opinion, the mitigation blocks are dog shit. All right, that's just my opinion, I guess. But yeah, so we have a low, a low, high, low, low. No, it's not. We don't see any unicorn models forming over here, so we can't really take any trade like that. So I'm just gonna wait and see how this plays out. I don't like consolidating phases, but this is on the buy side of the curve. So again, this is just market maker models, market maker buy models within market maker buy models, because the overall bias is what? Bullish. You can see over here that we're on the buy side of the curve, which means the overall bias for everything in general is the market maker buy model. So overall, everything is bullish, in fact. So you can see if I retrace over here, we have a bullish momentum clearly indicating. So I'm not scared to be on the buyer side in a market maker buy model, especially on the buy side of the curve. As you can see, that's exactly what's happening. So that's why I'm confident in the fact that it will ultimately go and hit this swing high over here, because this is in fact the swing high. It's actually this right here. Okay, so I'm confident about that. So over here, what I'm going to do is actually use this as my swing low. All right, so we're going to go and retrace all the way towards the buy side liquidity, and we're going to, as you can see, it's retesting this level, and it's going to use this level as support. Retest, sweep this liquidity right here. This is sweeping liquidity, come down and retest this level right here. So it's pretty simple, pretty easy. So over here, I'm gonna look for any like internal term highs or internal term lows, low key. So what I'm gonna do over here is look for 4-hour time frame internal term highs or internal term lows. So it's basically between two standard term lows or standard term highs. You can see an internal term low. So it's between. Think of it like this. So as an internal term high or standard term high, or let's just say standard term high. Between that we have an internal term high and a standard term high. So it forms like this. So what we're gonna look for over here is a standard term high, standard term high, and a standard term high right here. So what we're seeing over here in here, okay, for example, this sweep right here, it is actually a liquidity sweep over here in the smaller time frame. For instance, what I'm saying is every standard term high that you see over here, so this is a theory that I'm also trying to digest, but every standard term high, okay, let me just type this out, right? Every standard term high is in fact a internal term high in a lower time frame. Right? Now this might not make sense. Every higher time frame standard term high, that makes more sense. All right, this might not make sense right now, but let me explain. All right, so basically, let's say for example over here, let's go to the day 4-hour time frame and let's look for a standard term high. So you can see, for example, let's take this one. Okay, I'm just gonna mark this as X. All right, this is a standard term high. In other words, it's a swing high in between nothing really. So for example, what I'm going to do here is I'm going to go to the 15-minute time frame, and you can see that this is a internal term high between two highs. This is a point of interest, and it retests this level over here. It retraces, liquidity sweeps, uses this level as support, and retraces towards buy side liquidity. So this is the theory that I'm really trying to understand, because if you understand this, because time is essentially what's the word for it? Parallax? No, it's basically I forgot the word for it, but time, whatever that happens in the higher time frame, some smaller change in the higher time frame is actually what's a bigger change in the lower time frame, right? So it's basically it is directly proportional, but in like bigger and larger scales. It's like looking at the world in like a global, like geographical fucking 3D map type of perspective, and then looking at what's happening in one specific country and making an average assumption, because trading is all about probabilities, just like anything else. So over here, what I can say over here is we're on the market maker pie model, so we're seeing a bit of a sweep, but overall, what do we know? That we are bullish. So we're gonna retrace up to this point. So I'm confident up to this point that it's gonna go hit TP. So let's see what's happening on XAU. So we gotta wait until it retraces this level over here. But over here, we can see that this is a drawn liquidity right here. So if we use this level, this is bearish displacement. So I'm not really willing to take this into consideration because I don't really give a fuck. But let me get rid of that for now. You can see this is a unicorn. I'm waiting for a fair value gap to be formed over here. I don't really see any fair value gaps. I mean, it's a breaker off the back, but if you want to take it another notch, for me personally, I really want like a fair value gap to be formed over here, so that way I can confirm with the unicorn model that's gonna, I have a little more faith in the unicorn model rather than just having a breaker here. So I'm waiting for a fair value gap to be formed to the upside and use it towards support from somewhere around here. Retrace to at least 50% encroachment, and then retrace towards this swing high right here. My lines are just so fucking ass, but you get the point. This swing high right here, and I'm expecting a liquidity sweep and then retracement above. So it's simple, pretty simple. It's pretty easy, man. This is pretty easy. So I'm just gonna see if my prediction is correct, and I'm trying to journal everything over here, so you can see that this is the first trade that I took over today. It was a loss, but the second trade that I took today is going towards TP, and I know of that for a fact. So over here, this was a smaller trade, so that's why I lost, because it was a smaller ratio essentially. So I was just like sort of messing around trying to understand, but it was my mistake, so I'm trying to journal as much as possible. So I missed the unicorn. The unicorn was down here, right, towards the hold up, bro, towards the smart money reversal, towards the smart money reversal area, slash bottom side of the curve. Right, so almost at 0.5 OT, which is equilibrium, which is essentially the horrible spot for entry, as price always has a reaction over there. All right, let's consider it as always this right here. Okay, so can I highlight? There we go. All right, can I use my highlighter? I don't know how this works. Yeah, there we go. Always there's a reaction over there. 15-minute fair value gap for entry, hoping it uses the fair value gap above, the 4-hour fair value gap above as support towards buy side liquidity on the 4-hour time frame. The chart seems to be following the market maker buy model over here, which was a loss. Why? Because it was a scalp trade. I gotta understand this in depth. Alright, so what I gotta do over here is, let me leave some space over here. Alright, so what we're seeing over here is another market maker buy model, and we're seeing a market maker buy model for our buy side liquidity swing high over here, and we seem to have a sweep, retrace down, and then go towards whatever the next drawn liquidity is. And simple, pretty simple stuff. So that's basically this trade that I'm taking right now. So for our next trade, I'm expecting this to be respected, this fair value gap. So I'm still seeing displacement towards, you see over here, we have displacement back towards retesting this level. So I'm not willing to take any trade from here. We're going to retest this level, retrace towards buy side liquidity right here. Simple as that. Let me get rid of all these lines that are on my screen. It's unnecessary lines. But yeah, so we're going to expect to retest this level and retracement from here, take a bit of a liquidity sweep and then retrace towards the next buy side liquidity. Simple as fuck. Alright, so I want price to be retesting this level. I need confirmation right here. I can't be taking no trade from like just looking at the fucking chart, because at that point you're just setting yourself up for failure. But I'm getting in before discount and before the equilibrium, so I have some space in between to even see like some sort of reaction retracement, because my stop loss would be somewhere like here. Alright, so we're gonna retrace all the way towards buy side liquidity. So if that does happen, then I will take a trade. If my setup is formed over here, then I will take that setup, trade towards this buy side liquidity, drawn liquidity over here. And on NAS 100, it seems to be the momentum. Of course, there's nobody in the market, so there's less volatility. This is just paper, by the way, so don't take the trade that I'm taking right now, because this is just paper and there's little to no volume, as the New York session starts in 2 hours almost. So there's a lot of time between, because London session just closed. London session is closed now, so yeah, it's already closed. I don't know why it says 6:23, but New York session is at 6:30 my time, so we gotta wait. Alright, so it doesn't make sense right now, so we gotta wait. So it seems like we are breaking structure. So let me show you guys something. High resistance liquidity run versus low resistance liquidity run, ICT trading. Right? So for example, where is it? Right here. So over here, you can see that we have a bunch of high resistance liquidity runs. So over here, you can see this is a bunch of high resistance liquidity runs. So we have more confirmation, but we also need to be in a high volume market area. For example, that is something like the New York session. So we have a low, high, low, low, high, high. So we have a lot of retracements over here. We have a low resistance liquidity run over here, as you can see. So we had a high resistance liquidity run in this area right here, this area right here. We had a high resistance liquidity run. See, the momentum is very strong, for example. So 4 hour of course doesn't say much, but if I take this trade from here using this level as support, retesting this level first, so you can see it's already retesting this level. If I retrace, I can expect to take this trade all the way up to this buy side liquidity level, at least to about this here, which is this first swing high. So let's take that until that point. Simple stuff. We just gotta make sure we get trial and error. I gotta make sure I journal every single day to see every trade that I take, so that way I can sort of journal and learn from my mistakes and overall improve as a trader to get the max win rate possible. So let me just journal this trade as well. Let me get my snipping tool out. Alright, I don't know why it does this thing, but give me 1 second. Alright, because I gotta take the screenshot on my second screen, because it always glitches out my first screen for some reason. It's probably because this is just a laptop and does weird shit. Alright, so we're going to journal this real quick. Alright, so this is how I journal as well. So this is the daily trade journal. So let's say NASDAQ, SMT compared with US 30. Alright, so we see this over here. So we can see oh shit, my bad. So over here we have a OT of from the swing high to the swing low. Right, so what do we see? So we see a 15-minute unicorn right here. So we see 15-minute, oh, sorry, not 15-minute. Yeah, it is a 15-minute, my bad. So 15-minute unicorn right here. No, it isn't. It's not a 15-minute unicorn. I'm tweaking. It's a, yeah, exactly. It is a 4-hour unicorn. Low, high, low, low, high, high. Seems to be closing right above. So actually, no, it does need to like retest this level. I'm confusing my own shit. Was this 15 minutes or was this? Let me see. Low, high, low, low. Low, high, low, low, high, high. Yeah, so it is 15 minutes. Low, high, low, low, high, high. It's supposed to be this area. What am I on? Low, high, low, low, high, high. It does need to retrace a little further. I'm not really confident in this trade though. Kind of confused here. Why did I take this as the unicorn? I am not too sure. Because I literally just took it on the 15-minute time frame. So let me think. High. No. Okay, it's supposed to be this. What am I on, bro? Why did I mark that as the unicorn? I actually have no idea why I marked that as the unicorn. Right here, and then we have the low, high, low, low, high, high. So we have this fair value gap right here. This is a fair value gap over here. We're using this level as support overall. We're retesting this level once again. And we're going to retrace towards buy side liquidity all the way up here. All the way up here. Yo, what's up? What's good, Smooth Brain? What's up, man? Hold on, what's good? Yo, I'm just journaling my trades, bro. Just trying to see if, because I gotta like look back at my trades and then be like, hey, this is basically what I did wrong, right? So yeah, right now it seems like we are on the discount level. Even on this like smaller time frame, this is on the discount level on this specific trend right here. On the OT, we're still on discount, relative discount. Like I know that for a fact. So over here, we are on discount. See, over here. I'm expecting reaction over here, but let me actually mark this level as in like some different color so that it makes more sense. Let me just say 0.5. Oh crap. Alright, so this is the 0.5. So I'm expecting a reaction over here. And this is the trend over here. So we're on premium right now, so we can't enter. So we just gotta wait until it hits this buy side liquidity and see what happens from there. So I'm expecting this level to be retested and then retrace towards this. I don't know, let's see. I'm trying to get good at spotting like the inducement zones and what was the other one? I forgot the name of the other one. But yeah, let's see how that goes. Man. So yeah, I'm probably just gonna end stream right now and try to journal, try to get better at what I'm doing. And yeah, that's pretty much it. See you guys.